What's going on, you guys? My name is Zach Hartley, and in this video we are going to do a quick update on the drone industry. I'm going to share with you the positions that I currently hold, what I am watching for in the charts right now because there's a couple of breakouts, and I'm going to talk about my strategy moving forward. Here is everything you need to know. Let's go. Okay, so as of right now, I currently have a couple of different positions in the drone industry. The best one right now is DraganFly. I'm up 168% on that position, currently makes up about 5.5% of my portfolio. And then I also hold Drone Delivery Canada stock as well as the warrants. Both of those are doing exceptionally well right now. And then as you can see, I've got some Red Light Holland shares and they're also doing well. I also have a small position in ACIC, not quite doing as well as these ones, but still not too bad. Now, Drone Delivery Canada, this is the company that I want to talk about right now because this is very exciting. As you can see, we came in here right around 60 cents. This is sort of where I bought in. The stock runs up to $1 and then comes back down to around 60-80 cents here before running up to a high of $1.20, $1.30. Really nice, and then it comes back down and it retests that exact same level of support before running up to $2.55. Now, since that high of $2.55, the stock has pretty much trailed in a consistently bearish direction, coming back down to that exact same level of support that we saw at the end of January here. Now, that's very important because that, first of all, is a very key level, and now we are starting to see a bounce off of that trend level. You can see we have a crossover of the MACD. The RSI has exited the oversold zone. The price has just crossed through our trend line. The price has just crossed through our 20-day moving average, and it is approaching our 50-day moving average. So all of the indications are very positive right now, and Drone Delivery Canada is about 41% down from its highs. Now, that sounds like a lot, but wait till you see the other companies we're going to look at. So I bring this chart up because I currently hold Drone Delivery Canada. If I wasn't in it right now, I would be buying it right now, and I am considering adding a little bit to my position, but what I'm thinking I'm going to do is actually add to DraganFly before I add to Drone Delivery Canada, just because I already own both the stock and the warrants in Drone Delivery Canada, and I want to balance it out a little bit. I do like Dragonfly, and it is almost showing the exact same pattern. As you can see, it comes in trading around 40 cents, moves up to all the way to a high of $4.25, comes back down to $1.50, and now is trading at $2.24 after breaking through our moving average, breaking through our trend line, crossover of the MACD, exit of the RSI. So almost the exact same indications. Currently, Dragonfly is trading at 47% below its highs, and I think there's an opportunity with this one as well. If you're not in the space already, I think now is a good opportunity because you've got a very clear level of support right here at $1.50. And so if you get in right now, you have a very clear stop loss where if it breaks below $1.50 there, it's very clear indication that your analysis was wrong. This is not a reversal in the trend, and maybe we're just going through a little bit of choppy trading right now. But as of right now, it does look like a turnaround and it looks very bullish. Now, I tried to tell you about both of these companies back in the day. I posted this one about Drone Delivery Canada back on November 7th when it was trading at 65 cents. That's pretty much exactly where I got in. I also brought up Dragonfly back when it was at 45 cents, and that was on December 15th. So I tried to get this out there. I've talked about all of these companies on my channel numerous times. So if you want more opportunities like this, remember to click that like and subscribe button. Now, there were a couple of short seller reports that came out in February that really put a damper on the industry as it was moving up. The two companies that got the short seller reports were Ehang and Egg Eagle. These are the ticker symbols, and these are the dates that the reports came out. So as you can see, it was quite literally just 2 days apart. I think it was a Tuesday, Thursday, and these reports had a very negative impact on both of these stocks. As you can see, Ehang is currently down 76% from its high of 129.8. It's currently trading at $30.36 right now, so it's down over 76%. And as you can see, the volume has completely fallen out of the stock, and that's probably the main reason that it continues to trade lower. Now, the other company that had the short seller report was UAVS. This is Egg Eagle, another drone company, and as you can see, they hit a high of $17.68, currently trading at $6.11, meaning that they are down 65% from their highs. And so Dragonfly and Drone Delivery Canada down about 45%, UAVs and Ehang down about 60 to 70% from the highs that we saw back in that sort of January, February range. And so very interesting industry dynamics. But what I do want to point out is almost all of these charts look like the exact same thing. The stock has come back down to a previous level of support after basically trading in a bearish pattern for several months. And so what's really exciting here is once you see one company start to break through and start to show signs of a reversal, just like you saw in Dragonfly, for example, and then you see it in Drone Delivery Canada, and then you see it in the other companies in the industry, that is what gives you industry confirmation, and that is what should give you more confidence to get into these positions. And so for me, my game plan is that I plan to add to my Dragonfly position. I plan to hold my Drone Delivery Canada position because I already have, I think it's my largest position when you add up the options and the stock. So I plan to hold that right now. I do have a small position in ACIC, which is Archer. They're not doing so well in that position, but that's okay. I do have some faith in that company long term, but I am going to be staying away from both UAVs and Ehang. Yes, they've fallen by the most, so you could argue that they have the most upside. I would also argue that they have the most risk. They have the most downside as well. There's a lot of people kind of betting against these guys right now, and they put out a big long report of why, and so you either need to completely agree with that report or completely deny it or just stay away from it. And for me, I'm just going to stay away from both these companies because I like Dragonfly and I like Drone Delivery Canada and I like Archer. So that's 3 companies already. That is enough exposure for me to the drone industry. Now, if you guys are interested in learning how to build a portfolio like this and understand companies and understand an industry like this, then you should definitely consider signing up for my Stock Market Fundamentals course. It is completely free when you sign up for a 2-week free trial on Skillshare, and there's over 9 hours of content that will walk you through, step by step, everything you need to know about getting started in the market and building a strategy. There's over 4,600 students that have gone through the course. There's over 250 reviews, and I would love to have you there. I promise you it'll be the best free resource that you can find online. Over 80% of people say it exceeded their expectations. Now, before you guys go out and make any investments, please make sure you do your own due diligence. This is all just my opinion. I am not a professional financial advisor. This is not a sponsored video. This is just my update and my holdings on the market. So if you get any value out of that, please consider liking and subscribing. I sincerely appreciate it, and I'll see you guys in the next video. Good luck trading, good luck investing, and we'll talk to you soon.